E-commerce has changed the way we shop. Instead of physically going to stores, we buy things online. This is super convenient. But what happens if the seller is dishonest? Or if someone uses your credit card without permission? That's where chargebacks come in. A chargeback lets you dispute a transaction when you're a victim of fraud or abuse. This protection means we can shop online with confidence. The right to dispute a charge was first introduced in the Fair Credit Billing Act of 1974. Yep, long before we had the internet. Since then, there have been updates to the rules, but the fundamental framework has remained essentially the same since disco was popular. So, how does a chargeback work? Let's say you find a charge you didn't authorize on a statement. You can call the bank that issued your card and dispute it. In most cases, the bank will immediately credit your account for the amount of the transaction while they investigate your claim. The issuing bank will then initiate a chargeback, meaning they call back the disputed funds from the seller's acquiring bank. At some point, the seller is notified of the dispute and given the opportunity to provide evidence to refute your claim through a process called representment. It is relatively difficult for a seller to overturn a chargeback through representment. And even if they're successful, they still have to pay chargeback fees. They even risk losing the right to process payments at all if too many transactions are disputed. For this reason, many merchants prefer to simply accept chargebacks as a cost of doing business. Chargebacks work pretty well in very clear-cut cases, like when a criminal uses a credit card without authorization. Unfortunately, cardholders can also abuse this process and file illegitimate chargebacks. For example, a consumer may contact their bank because they are simply unhappy with an online purchase. They may think contacting the bank will be easier than resolving the issue with the seller. These illegitimate chargebacks are called first-party misuse, or, in other terms, friendly fraud. According to Visa, these actually comprise the majority of payment disputes. As many as 3 out of 4 chargebacks may be causes of friendly fraud. If you would like to learn more about friendly fraud, or if you are an online seller who is struggling with illegitimate disputes, check out our blog and learn more.